Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. SPX hit fresh record highs on Monday as positive US and Iran headlines reversed early weakness despite rising oil and volatility. There was a lot of opportunities on the session, both to the long side and the short side, and we were very active, taking a total of 9 trades, 7 winners, 2 losers, for a total profit of just under $5,000, risking no more than 1% per trade. Now, the SPX closed positive, up 0.26%, closing at 7,600, the SPX call wall and ABS. Technology gained on the session, up 2.5%, semis up 1.5%, reversing early weakness. Energy also gaining up 1.8% as crude oil prices continue to rise. All other sectors red on the session. Volatility also caught a bid. It was up about 5%, just under 5% yesterday, up another 1.3% today, trading at 16.3. So another spot up vol up session. The market was much more neutral than in balance, particularly in the first 2 hours of trade, printing a series of lower highs with a flat bottom at 70, holding off low of day, which was the previous session's low of 75.63. Tight consolidation here, and we were looking for a move one way or the other. We had an upside target of 7,600, which was the max call, the strike with the highest 0DTE call volume, and then a downside target of 75.50, which was the max put, the strike with the highest 0DTE put volume. Now, the max put ended up shifting higher to 75.70 prior to the breakout, which was a bullish signal. But what we were watching from a price action perspective was this 5-minute consolidation range, which we broke out to the upside, broke that downsloping trend line. And then we had a number of headlines that came in, positive geopolitical headlines that sparked some algo buying. Matter of fact, all 3 of these legs were headline driven, which was great for us. We were really tactical on the upside. I mean, several long call trades, nearly 100% ROI, and the trade duration was no more than 10 minutes, right? You put the trade on, as soon as you get that algo candle, you want to be booking profits into those algo candles, because that's when velocity picks up, and velocity and price equates to velocity and premium, so that single option can juice up quite quickly. So I would say a lot of good opportunities, both on the upside as well as the downside. I would say all really short duration trades. Of course, you could have just bought calls and rode the market up, but that's hindsight. We knew headline risk was high, but we didn't know, are we going to get them, what direction it's going to be, because we did have negative headlines in the pre-market, which sparked that early weakness. But overall, nice move higher. And we did break 7,600. Now, we noted that this is a weaker level given the fact that it's the call wall and ABS, but noted that 76.15 was the SPY call wall and a very big supply zone, with the implied high just overhead at 76.20. And this zone held. Obviously, we chopped here for a while before reverting down and pinning that 7,600 strike. For today, notable changes include the shift higher in the SPX put wall to 75.70, which is also the SPX flip. 5 points above that is the SPY flip level, 75.75, so this is major support today. Previous session's low is just below that, 75.63. Pivot point remains 7,600. This is no longer the SPX call wall, but it is the ABS G1, the strike with the highest total gamma. Call wall has shifted higher to 7,700, so that does lift the upper bound, but there's still a lot of supply overhead. SPY call wall 76.15, previous session's high 76.18, 76.20, 25, so big supply zone here. In the event we do break out above this zone, it potentially opens the door to 76.50. Transitioning over to our dashboard, total gamma exposure remains positive, 1.14 billion notional, trading above our transitional level of 75.70, which is also the put wall, and this is in response to short-dated puts being added at 75.70. Short-dated puts were also added at 75.45, marking 2 big negative gamma strikes on the downside, potential downside target and bounce points in the event of a bearish session. 7600, perhaps a secondary pivot. It's a very neutral profile below, and we've seen a lot of chop between 7600 and 7570. So probably a zone you want to continue to trade more tactically. Above 6700, flows are going to become more supportive, but there's a lot of supply overhead. 7620, 7625. We have the SPY call wall at 760, which is SPX 7615, which more or less marks the high from the previous session. And then we have 7650, 7700, which is technically the call wall. But take note here, the variance between 7700, 650, and 600 is very minimal. There's just a lot of supply overhead, and the market is clearly losing some steam. In terms of the implied move today, 0.5%, that's an implied high of 76.37 and an implied low of 75.61. Geopolitical headline risk remains high. I've said this for over 2 weeks now, and I think we've had a headline for every day over the past 10 days, to the upside, to the downside. So keep your newsfeed up for potential momentum opportunities and obviously risk, because you can be caught on the wrong side of that. Additionally, we have Jolt's job openings due out at 10 o'clock. That is a known market mover. And then we want to keep a close eye on the VIX as it woke up yesterday.